What is going on, traders? Welcome to the Market in Three with me, John, Senior Market Analyst here at Anto Capital. I'm here today to tell you everything that's going on in the FX markets and what markets are moving. And what a morning it has been. Escalations between the US and Iran have kicked off again, driving US dollar strength. Big moves coming in the markets, and all it's coming down to is this. So if I just show you what is going on, you see yields jump as Trump thinks the ceasefire is over. So basically what's happening is there was some attacks by Iran on certain vessels that was reported yesterday. US retaliated by basically cutting off any kind of or the Treasury basically cut them off by giving any kind of monetary value to allow them to the license basically to sell the oil on the global supply network. From that, then there's been reports of strikes, and then this morning we had a lot of geopolitical news flowing through, basically saying it kicked off with Trump saying that they've had some great meetings. Attacked very powerfully against Iran last night. We've wasted a lot of time with Iran. Iran doesn't know what it's doing. We've then had comments saying the US president says he is not happy with NATO when it comes to Greenland, blah, blah, blah. And then he's talked about China instance by going saying President Trump says China is attempting to take over the Panama Canal, will not let this happen. And then the big news that dropped around about 9:15 this morning was that he thinks that the ceasefire is now over and is concerned about wasting his time with Iran. Don't want to deal with a bunch of liars, is his actual words. So we've seen a huge turnaround in financial markets. Let's take a look at gold, for instance. Gold prices down aggressively today. We can see that from highs to low, we are down 922 pips on the day so far, which is an incredible move. If we look at the 30-minute time frame here on gold, we can see that prices have just broken to the downside. Now, yesterday we talked about gold breaking higher, right? We said that, look at the hourly chart, prices started to break higher. It broke through this neckline support from the 4-hour chart, and we talked about this potential breakout of this trend line in here. The problem, I said, was that gold doesn't just break out of a trend line and move higher. That is a ridiculous thing to think. You have to look at the other factors that are influencing gold. And one of the things we talked about was the US Treasury yields, right? We talked about the fact that the US 2-year in particular at the time was trading above the 50 moving average. It was spiking higher at the time that we discussed yesterday. Now, if that sustained, like we said, then gold prices would actually likely come lower. And that's what we've had. Really, the catalyst driving it was this news. It was kind of positioning a little bit like this ahead of the FOMC meeting minutes tonight, but big move has come out of the markets because of this geopolitical tension between the US and Iran, and now US yields has spiked higher. Because it spiked higher, we've seen the pricing of the US dollar move higher as well, and dollar strength has pushed on today. Taking a look at Brent crude oil, we are now trading back higher. We're up 3.5% today so far. Yesterday, we were up around about 4.5%, and that was down to the strikes that were created by Iran. So basically, this geopolitical tension that has been kind of, just bubbling away in the background. We haven't really heard a lot about what was going on between the US and Iran deal. There's a 60, 80-day ceasefire that was agreed on previously. That has now come to an end. And the market is now pricing in the idea that inflation again, or at least from a safe haven point of view, the dollar is going to get bought up. We've also seen, obviously, supply issues. That's why we're seeing oil prices move back to the upside. The volatility index spiked today, and it's spiking towards 20, which which is negative for the likes of the stock market. So I did like the idea of being long stocks. I was long stocks, ended up getting taken out of a trade on the S&P 500, but I was long in and around this area. That was when we had this sort of initial move down. Markets then recovered that, and we've had another spike back down in the S&P 500, back into this supporting area in here. However, the likelihood of this rebounding right now is looking very, very low, just because of the comments from Trump. I think there's this whole idea that maybe we could get what's known as the taco trade, which is basically Trump always chickens out. So there's an ability for that to happen, because he has stated he doesn't want to continue the war over and over and over again. But obviously, this has now become something much different. Is he going to continue to attack Iran? Are we going to see the Strait of Hormuz close again? All those kind of things are going to add pressure to risk. And if we just go take a look, let's have a look at the CNN Fear and Greed Index, because yesterday it was trading around about 43, which it is today. So on the market open, we'll see how this develops, because if this starts pushing into different directions, then we could obviously see a move to extreme fear, which will then see the likes of our volatility index kind of spiking higher. Put and call options, they're on the buy side at the moment, so some of those are going to get burnt a little bit. But yeah, VIX is trading above its 50-day moving average again now as of today. So there's going to be a lot of interesting developments going over today. You're going to have to keep on top of it. This is where something like a news squawk comes in very handy. You can just keep this on in the background. This is what I do, and you'll just get reports over time. Now, we do obviously have important news coming up today as well. We have the US FOMC meeting minutes. So really important for the markets to look into this. But at the same time, volatility is going to be really high anyway. So it's going to be interesting to see the developments if the market actually takes much notice of this FOMC meeting minutes. It probably will, because obviously this is the first sort of FOMC meeting minutes we're going to see with Fed Walsh's comments in there. So we'll see what's been changed, or X, Y, and Z. So there might be a little bit of volatility to this, but I do think sometimes when it becomes down to sort of geopolitical tension and geopolitical pressures, the market can just focus on that more than it would with a standard sort of event that's coming out in the market. So how does that help us today? Well, it doesn't really. I mean, there are opportunities potentially around. What you'll have to look at is the volatility index. If we see this spike above 20, then usually that can coincide with a bit of a low that forms in the market. So you might be looking at a potential long on the S&P 500 if we see a move on the VIX above 20. But that obviously that can continue. NASDAQ has also been underperforming recently, the NAS 100 or US 100. That has also been dropping to the downside. A lot of to do with the tech sector, the AI sector being hit with uncertainty. That is driving the NASDAQ lower. This will add further pressure to that. But the big story really is looking at these yields. If these yields continue to climb, especially the US 10-year up above that sort of 4.5%, perhaps even up into the 5%, that is huge for dollar strength. If we do see that, I do think the dollar will probably be trading back above this kind of 101.73 handle. So I was looking at the charts today. We can see obviously gold is pushing a little bit lower, and it's one of those where if you're in kind of trades, like I was in trades that were kind of within the narrative of what was going on, in terms of everything was fine, tensions had de-escalated, X, Y, and Z. Now that's changed. So as a trader, you have to pivot quite aggressively in that sense. So for me, risk off is now in charge. We're starting to see some downside. We can look at some key levels on gold. If we take a look at this market profile here and just kind of drop it down to where kind of gold is heading at the moment, we can look at the market profile that covers the 1st of July, and we can see kind of like the most traded areas within that. We can kind of push it over 2 days as well, just to see where we're at. But you can see we've already broken through the point of control of those first 2 days of the month. So kind of just narrowing that down on a bit more of a granular level, looking at sort of the first of July, we're now broken into the value area high of that, and the point of control comes all the way down at $3,977. So this area in here in particular could be an area where price wants to go and explore, because this is an area we haven't seen the point of control tested yet. Okay, so within that sort of zone, we have that point of control that has not been tested. So if, for me, the market likes to go from value to value, right? So fair value to fair value. The fair value is built up in these consolidations. The market breaks out of those consolidations, it searches for fair value elsewhere. To kind of illustrate that in a little bit more detail, let's take a look at this day here, for instance. So this is the 2nd of July. We can see that we have the value area being built in these two different areas. That's why you see the distributions there. I'll just get a pen tool. You can see that in the morning session, we had a distribution where you can see price getting built there. Why is that? Because you've got all this consolidation. The market spent most of its time in the morning session in this area here. We then rallied out of that, and then price consolidated in the late US session, right? Which then creates this sort of distribution here where you've got like a double distribution day. How do you trade that? Well, that's the point. You're looking at these kind of areas to be acting as support and resistance in the future, right? These distribution areas. So if we take a look at just the US session in isolation, you can see that there is a certain kind of strong volume area in here, right? And that could be an area of support in the future. Price comes down initially, touches the value area high of that US session, pushes higher, comes down, tests the point of control of that session in there on the 2nd of July, and then rallies out of that. So those are the kind of areas that you want to be looking for your key areas of support and resistance, right? So if I look down at where we are today, we can see that price is breaking to the downside. Can't really do anything about this at the moment because it's being driven by this macro data. We need the market to kind of calm down a little bit. And it might, going into the US session, we might see a little bit of calm between now and the US session if there's no more comments coming out. If we see extra comments coming out, or we see reports of further attacks, X, Y, and Z, then the likelihood is that we are going to see a continuation of this, okay? Let's go and take a look at some of the majors across the board then, what has been happening. So New Zealand US dollar still likes the downside on Kiwi US dollar. Obviously, there was RBNZ news. They were actually a little bit more hawkish than we expected. There was a lot of talk that actually the RBNZ might not even hike interest rates. But they did. They hiked it 25 basis points. So we saw actually some strength coming out of the New Zealand versus the US dollar because of that, because of the comments after basically saying that there could be hikes in the future, and hikes are likely if inflation continues. So that market continued to push higher. It then came back up into the resistance level around about that 57.25 handle, and we saw the rejection, but that was largely down to the fact of this news breaking out. So not really going to touch New Zealand US dollar at the moment. I do like the idea of being a seller because Kiwi is weak, but those comments from the RBNZ might just keep it a little bit more sort of upwards at the moment. If we take a look at oil prices have jumped drastically. We can obviously see that we are up today alone around about 358 pips. Market is continuing to push higher, and this is where a lot of the action will probably rest when it comes to the markets at the moment in terms of volatility. So looking at oil prices again, look where price reacted. If we take a look at what happened on the 10th of February, there was just a consolidative day, right? Again, if I just bring it in, my market profile tool. Okay, might not go all the way back here. Okay, it does. You know, you can see that we have that sort of value area being built all the way down in here. You see the high volume nodes just coming in, but the volume starts kicking up around about that $67.30 before we had that kind of gap up. So price kind of basically come and filled that sort of gap that we had where we saw the Iran war kind of escalate from. And it's now since just found support and started pushing higher. And it's probably going to continue to do that, because what we're going to see is the fact that supply chains may be restricted again. So it might start pushing back a little bit higher because of that. And if we look at the whole kind of profile from the move down recently, you can see that market is now starting to break through some of these kind of low volume node areas, coming into these kind of high volume node areas on the market profile. And we do have a gap that is featured on the 15th of June, where we can see that gap came into the market here between the $83.11 and $85.34. So that could be a good level to keep our eye on in terms of upside potential targets. Could be this kind of low volume area, well, no volume area essentially, because markets gapped and continued to rally, to continue to fall down. So if you're looking for potential opportunities to trade oil, that could be a possibility, looking for a break in that move in here and looking for a continuation to the upside. But look at the weekly profile of last week. We're now trading above that sort of area of volume in here. So looking for a continuation of a potential support point. So this area in here may act as support going forward. We could potentially look for longs around about that $72 handle to the upside, especially if we do see these tensions between the US and Iran continue. So that's what I'm going to be looking for in terms of that. There's, in terms of the overall kind of markets at the moment, they're kind of in up, it's up in arms. And when a geopolitical move comes like this, can be very difficult trading conditions. So the one thing I would say to you is, if you are trading in these conditions, trade at a lower risk. You can see I've got a couple of trades on at the moment on euro, US dollar as well. So I'm looking to potentially take advantage of that dollar strength in the market. But yeah, keep an eye on your risk and make sure that you're always trading at a lower risk in these financial conditions. You might think that because the volatility has jumped, there's a great deal of capital to be made and you might want to risk a little bit extra. I find that in higher volatility markets, it can be a lot more difficult to take advantage of that. So let's move on. So I'm going to skip the big story of the day and the chart check and all that, because I think it had to blend all into one today because of, the big story is the fact that the tensions between Iran and the US have escalated. Trump statement of, we are seeing the ceasefire end, and he thinks that the ceasefire is over. Big news. So that is dominating the charts at the moment, and it's causing all these big price movements. So moving on to the skill of the day. So the skill of the day, ironically, is actually surrounding news. And the skill of the day today was going to be why good news can sometimes be bad for price. And we've seen this over and over again in terms of different days in the markets where you see these big news events coming out. So let's take NFP, for instance. You see NFP come out. NFP has a stronger jobs number. It has a lower unemployment rate, and it has a boost in wages. Dollar strength off the back of that. But sometimes the news is already priced in, and big news events as well, including like interest rates. Those are the ones that we usually see a little bit of a pricing in factor, right? So you'll see that the market price is in the fact that the US dollar, for instance, FOMC, Federal Reserve, they are looking to cut interest rates. What you'll see is the market will start pricing that in already, because markets are forward thinking. So they will be looking to price in those interest rate cuts early. But what retail traders tend to do is wait for the actual event to come out, and then they will look to see if the Fed cut rates. And if they cut rates, they expect the dollar to fall. But that's not it. It's already priced into the price action that you're seeing on the charts, right? So you have to take that into consideration every time you look for a position in the markets. You can see that a lot of the times that when you're looking at these kind of big macro trends, especially, is that you have to be forward thinking. You have to be looking at what the potential interest rate is going to do. So take now for a good example of that. The market, if we actually have a little look, let's see what the CME Fed Watch tool is saying today, because we could see this probably changing a lot over the past couple of days. So yesterday, I think it was around about 25% chance of a hike. So it'd be interesting to see how the CME Fed tool is pricing today. So it's pricing today at 33.7%. So if we take a look at yesterday, it says that 1 day ago there was a 26.7% chance of a rate hike in the July meeting. That has now increased to 33.7%. So obviously that tells us that the interest rate markets, bond markets, they are pricing in more of a chance that we are going to see a rate hike in the next meeting. Now, obviously, it's still weighted to 66% no change, so it still favors the no change in the next meeting. But let's say tensions continue, oil prices rally again, FOMC meeting minutes tonight is more hawkish, then we could see the probability of a rate hike increase. That to me is US dollar bullishness. Okay. If we see this decrease, that is US dollar weakness. Okay. And that's how you can kind of get confused with good news not being actually good for the currency, right? You might look at CPI, for instance, and the inflation comes in better than expected, but doesn't really move, and you're confused by that. And that's because the market is expecting inflation to be higher. So if it is higher, it's not really new news coming out, right? It's just cementing what they were already thinking. So be careful when you are trading high event or high impact news events. Sometimes good news is not always good news. Sometimes bad is not always bad. You have to understand what the central banks are doing in order to trade those types of news events. Okay. So like I said, markets are just all over the place at the moment. We've got the S&P 500 dropping, for instance. We've got gold prices. They're starting to recover a little bit here, starting to give a little bit back. But obviously, we have moved a long way. So trying to get short now on the likes of gold, probably a little bit difficult. I do like downside. I think if we do see the US session open a little bit later and gold prices come back, then maybe we can see a move down towards this kind of 39.88 handle, maybe even a little bit lower. If I just move my market profile over to today's price action, all the price action is above. You've got around about this 4,097 handle all the way up into this kind of 4,130 area. We're trading outside of today's value. So, that could be an area of resistance for price to continue to push to the downside. Okay. So looking at it right now, markets are just trying to digest that information that the ceasefire between the US and Iran could be over. Let's see how it plays out. If we do see an escalation continue, then stock market's going to be down, dollar's going to be bullish, gold's going to be lower, X, Y, and Z. So keep an eye out for those news events. If you don't have a news squawk, then follow along with us. I update in our Telegram channel as well. So if you want to join the Telegram channel, let me just add this in here. I'll add it in the chat. So you can join our Telegram channel here. That's where I'm going to be posting most of the updates of what's going on today. So if you want to jump in there, feel free to do so. I also have a webinar coming up on how to trade news events very, very soon. And that detail is also in the Telegram channel. So if you want to join that, it's absolutely free. Feel free to jump in there, and I will catch you in there. See you later, guys.